Happy Friday out there, folks. It's your skipper here, Darius Dale, to present our macro minute for Friday, February 18th, 2022. Starting with markets this morning, we have stocks mixed, commodities down, crypto down, dollar flat, global bond yields mixed. Big movers, we have WTI off 3%. Yesterday, communication services, plunged 3%, taking its drawdown from its September 1st high, 52-week high, to minus 20%, becoming the first S&P 500 sector to officially crash. According to our analysis, there will likely be many more by the time 2022 concludes if we are even in the area code of right on our growth scare thesis. At minus 16%, minus 14%, and minus 13%, respectively. Consumer discretionary, real estate, and tech are also in double digit drawdown territory currently. On the macro front, yesterday's building permits and housing starts data out of the U.S. economy indicate more supply is coming, just not quickly enough to bail the Fed out from a dramatic overshoot on core PCE inflation relative to its forecast. So building permits, they increased to 1.9 million SAR. That's the highest print we've seen since May of 2006. So we're trying to respond with housing supply, but housing starts, because we can't find workers, actually slowed 70K to a SAR of 1.6 million. That's the lowest we've seen in a couple of months. These are January figures. Taking it to the chart, what I'm showing in this chart, the blue line shows S&P CoreLogic Case-Shiller national home price year-over-year time series. The red line is showing the OER CPI on a year-over-year basis as well. And the reason we show it on a spread basis in the bottom panel is that historically, as denoted by the dotted lines, whenever we've seen a peak in the spread between home price appreciation, we've always seen a multi-quarter, multi-year, really, trending acceleration in the red line, which is owner's equivalent rent inflation. And obviously, it's for two reasons. One, it's economic. We price people out of the housing market, so people start to rent. But more importantly, it's also technical in terms of how the BLS calculates owner's equivalent rent. It's a very lagged survey process that takes really a full year before we actually get similar samples. So this process usually takes a really long time. It's obviously gone pretty quickly off the lows of 2020 or early 2021. But the reality is this is something that will remain a countercyclical impulse on inflation throughout the balance of this year. Shifting gears to our probable range setups, we got overbought signals in gold and silver. Nothing oversold in our global macro risk matrix. S&P 500, that is neutral VAMs, minus 2% of downside in its probable range versus 5.6% of upside. WTI, a little bit more upside finally. Neutral VAMs, minus 6% of downside versus 9% of upside, are still waiting on a further pullback there. We think investors should wait on a further pullback there. Bloomberg Dollar Index, bullish VAMs, minus 0.2% of downside versus 1.6% of upside. 10-year Treasury yield, bullish VAM, still minus 13 basis points of downside versus 21 basis points of upside. Bitcoin is bearish VAM, still minus 11% of downside versus 9% of upside. Ethereum bearish VAM still as well, minus 16% of downside versus 10% of upside. And then lastly, gold, neutral VAMs, minus 5% of downside, and it continues to hodl the upper bound of its probable range. So don't chase gold here and now. With that, Darius Dale presenting our macro minute for Friday, February 18th, 2022. Everyone have a wonderful weekend.